One of our traders this morning on a Bund profile play made $85,000. Okay, he was short about 300 lots and he kind of ran it for the full length of the move this morning. Now this trade over here, now this is not important. It's, you know, the monetary amount and however you want to execute a trade isn't the important aspect of trading. The important aspect, because this is a pure function and a product of a process, a routine, of a practice that he's been doing and a pattern that he's been logging for almost 5 years now. And this particular pattern, you know, he's watched it, he's really evolved with it, and it's a pattern where he actually at one stage used to lose a lot of money. Then he used to lose, you know, he used to have his biggest down days. And then as he started logging it, as he started understanding it, as the brain starts to function because you're making these automatic logging processes, you start to find and you start to recognize certain types of patterns. And then those patterns eventually start becoming your edge. Now, what I wanted to talk about, really important, as I was speaking to him this morning, probably literally about half an hour ago. Don't know how to spell, my grammar's always terrible. Contextualizing your patterns. And this is really the subject of today. Okay, and as I was speaking, he was actually telling me how last night he was in the shower, in his bed, and he was meditating the entire pattern through. And that process of meditating, of acting, he's effectively almost neuro-engineering his brain of how he's going to execute the trade. When you've seen something over and over again and you've watched it over and over again, it's really critical and really important of making sure all the elements, from your emotional elements, from the context of the day, the context of the preceding days that lead into the event, of how you're going to execute the setup. And I could show you a market that has a profile that has a ledge pattern like this, but it's against the backdrop of, you know, some really volatile days. Okay, so, you know, excessively volatile, and then it's, you know, it's a really quiet day, and then it breaks it down by a couple of ticks, and then it rotates back upwards. Whereas if I show you a ledge pattern against a couple of daily lows, the context is different. And also the psychological context of, you know, if you're on a trading floor, feeling what's happening on the trading floor, and the information. So, for example, from today, from a younger trader's perspective, you know, the move in the Bund down. Now, I'm not going to go through details of how he was seeing the pattern and the main reasons why he executed the pattern. But what I am going to tell you is, how are you going to log your experience? And I was speaking to one of the younger traders in the training room, a gentleman by the name of Shane, and he was talking to me of what he saw on the BTP, on what he saw on the OAT. And what's so important is, when you're faced with that, you'll be faced with that same scenario again to some degree. And so from a morning perspective, and what I'm trying to show you here is, by contextualizing your patterns, by putting layers and another layer upon it, you're starting to fine-tune your execution method, because that's what it comes down to at the end of the day. We can all kind of see potential direction, but how are you going to nail your execution? And so what's so vital and what's so important, sorry, just hold on a sec. Okay. Sorry, what's so critical in when you're trying to execute your trades and when you're trying to implement them is how you design the contextual background of your pattern. So from a very minimalistic perspective, a very minimalistic point of view, is so yesterday we had a profile design that was near a critical level of 18s, and you know, we've had these tight profile days for the last, you know, I don't know, 3 or 4 or 5 days. Yesterday was a day where, you know, the market was fairly, you know, every time it offered down, you know, from more or less, you know, when we had that offer, you know, all session, the T-notes still held their offer. It then moved all the way towards, back to the upside, and there was a lot of block activities. And then this morning, when you came in, the market actually closed quite after the futures close. So after the cash close, there was, I think, a 30-year note auction, and the market went up to around 35s on nothing. Okay, now how do I describe nothing? Now, this is important. You go look at the footprint, okay? And you can see in the footprint, when you have a move towards the upside, that's... sorry guys, just hold on. Just write to the chat room. Just mention our technical team are looking into it, and we'll give him another link. Otherwise, you can watch the recording afterwards. Okay? And then I'll just leave it there. Just our technical team looking at it. And yeah. Okay. So firstly, you have a move from a low where everyone was looking at yesterday, a move on the footprint where it moved up on no volume. So go look at it yourself. What does that look like? What does a strong move look like after cash when nothing happens? Then what happens the next session? The market started rotating and started building. So this morning started building quite a block activity over here. So you could say, well, someone was searching for liquidity the next session before the true move down. And then what you had in your peripheral markets, now you're logging your contextual background. Now in your peripheral market, you had the BTP was offering again after yesterday's very big down move. It was going down. It was having another leg down. So after that leg down, the oats were still kind of holding themselves, and the bund, whilst the BTP was offering down, the bund was still holding itself on the top quarter of the morning's session. Once the OAT started going and the BTP started going, then all of a sudden you had your peripheral markets starting to offer, powerfully through the previous day's low. You have a technical boundary that could unleash or unravel the positioning of this zone over here. And the 18s, the 17s, the 18s and 17s area. You understand your technical backdrop. You have a peripheral backdrop. You might be hearing what's happening on the floor. The moment the market shoots through, you also want to see a particular type of order flow activity. And you've also got to log the type of break. But sometimes you get a break with powerful momentum and the market just keeps on going. Sometimes you get a break where it's actually coming off on nothing. There's no buyers. Like in the previous day, you saw every time it made lows, there was someone absorbing a hell of a lot. Today, the price personality compared to the previous day completely altered. So all of a sudden, the market started shifting through. Once it got to 10s, then there was your first so-called volume event, where someone was just sitting on the offer at around 11s and 12s. And what I'm doing here, I'm just describing the entire move. I'm describing, the details, the peripheral things that I'm observing. My questioning side where, I was a little bit emotional because I shorted here, I went 2 ticks offside, and I'm thinking I actually was down yesterday, and if I lose, so you're thinking unobjective thoughts in that moment. So because you're thinking those unobjective thoughts in those moments, you've got to log that in, because next time you want to manage that. You want to anchor those thoughts into a more objective state, into a subjective emotional element. So then the market starts shifting, and then I know a lot of people were looking for a break of that ledge 93s towards the downside, and that's exactly what the trader who had an exceptional morning, that's exactly what he was logging through in his head when he was meditating the night before, is how is he going to hold his size? He's just been increasing his size, this year. He started out around 50 lots. He's now at 300, and he was going through a process last night, was whilst he was in the shower, whilst he was in bed, okay, once I have the size on, how am I going to feel? How am I going to hold this trade towards my target? What do I need to see on the order flow for me not to get out? There's other things where, okay, if I'm holding but the markets aren't quite going and it's ripping back a little bit more, well, then I will still have to start liquidate. Also understanding of knowing when you're wrong. But meditating, so for him, he's been able to hold trades and get through, but what he's always struggled with is holding his full clip. So, he normally gets half of his clip out and he gets the rest out at his target. But how was he able to hold literally 80% to 100% of his full clip to this target over here. Okay, so contextualizing your patterns. It is so vital, and I'll say that word again, contextualizing your patterns. If you contextualize them, so what us humans are a little bit, completely different to the machine or to any type of system, is that we can build layers upon our patterns. But if you don't log it, if you don't log your experience, if you don't log it at the end of the day when it's really fresh, you're not going to be able to draw upon that information in your subconscious mind. You're not be able to extract it as easily. So it's those ones who are able to log their information. However you log that, you might just write it down on a rough note. You might do a video. You might do an Evernote, but log it and structure it. And one of the things I wish I could show you the Skype message he sent me this morning. He said, Alex, this is an identical pattern to on this period a couple of months ago. So he was looking through the pattern in the evening, then he went to go meditate. And so that performance of what he made, it's a product of a lot of process and routine over a 4-year period. Those days don't come because they just arrive and there's a great event. Not many, the next best performance on that was significantly down from that because he's logged this pattern the best.